Hi, everyone, and welcome back to another show. My name is Tyler, and I'm with Matt, the founder of ORATS. ORATS is an options analytics platform built on top of over 15 years of historical options data. And our platform is integrated with Tradier, meaning you can research and discover trades on our platform and then seamlessly send them through to your Tradier brokerage account. Today on the show, we're going to look at how you can use exit alerts to reduce your risk and become a more disciplined trader. We'll also spend the first few minutes of the show going over our trades from last week. Matt, do you want to share your screen and get us started?
Sure. All right. Thanks, Tyler, for the intro. As we are wont to do, we show the trades that we had, and we had quite a few. So we'll get right into them. So we've had Expedia and a SPY trade for quite a while. I have a picture of it because they both expired last week. Expedia was a good winner. So we had a reverse iron butterfly. So we were long the insides and short the outside. So we got the max profit on these. So we had a call spread that was 114, 118. Expedia went out well through 118. So we got the total, the $4 profit on that one. That was a good one. And then SPY, we had a poor one. We had a 132 butterfly that it went all the way through. And so we lost on that one. Brings us, it's very topical because we should have had the exit alert on that. So we would have gotten notified that it went through the strike and we should get out there. But that's what the topic of the show is today. But I don't want to foreshadow it too much. And then we had a bunch of, the last week we talked about small calls and small puts. So we put a few of those on and we could see how those did. So we'll go through the puts first. Let me see if this is working. Yeah. So we had DG, CRM, and Dell were the puts. And then, so let's look at those first. Those were live still. So CRM, that actually was down a lot more today. The markets rallied a bit on our watch list. We could see that the market's just going straight up. Let's see, with CRM, we have this put on. We bought it for 91 cents. It's now $1.94, but I think it was higher than that earlier when I looked at it. So we could look at the trade history, very handy tool. It got up to like 250. So right now it's 194. So that's looking good. So that's what you kind of look for in these, Tyler, is you want to, when you're putting on these cheap, way out of the monies, you're probably going to win on, when we put it on, it's about a 10 delta. So you're only supposed to win on about 1 of 10. So you got to make, quite a, maybe 10 times your money on one of these in order to pay for the other one. So you have to kind of let it go, which is what we'll be doing on that one. Let's see the put, and then we'd have put on Dell, not doing anything, and then not doing anything in Dollar General. So let's look at the calls now. So CVE, TRP, and WES. So CVE is up a little bit. Nothing going there too much. TRP actually down today, so that's not too great. And WES is up a little bit, so just kind of hanging in there. So we have a lot of days, 61 days on that one. So we just kind of sit back and wait for it to go up. So that's how I play those way out of the money things. Any questions on those before we get going?
And quite a lot of positions, but it's good to keep track of them and keep everyone updated on how they're doing. And you can always go back and watch the previous shows to see how we put those trades on and what we did to do that.
Right. And then a cool things that we have, again, if the exit alerts, if you you could add an alert of profit and loss. In these cases, you want to be alerted maybe after 300%, and then you write some notes, paper trading on cheap options. And then what you could do, I'll trash that one. Is you can submit that change, and then you go to the next one, WES, and you could add another alert, or you could restore the last one. So that's pretty handy. So I'll submit that change, but you have to still type in your note. Anyway, I could go through those, but so so that's the kind of alert that I would put on these types of trade, Tyler.
All right.
Yeah. Do you have anything on alerts that you're curious about?
Well, we're kind of going to dive into it on the show today. The different kinds of alerts and all the different ways exit alerts are kind of integrated into the dashboard. So we have the exit alerts tab in the positions view, which you can see there. And Matt, if you click on it, we can see all of our positions exit alerts that are checking right now, are the tab up there.
Right.
Yeah.
Yeah.
So this just sort of keeps track of all your exit alerts. And maybe you can talk more about that too, Matt.
Yeah. So this is neat because this shows you all the live alerts that you're doing and all the completed ones. You could click on only show the active ones, and then you could see all the settings that we have for these particular alerts, and these aren't going to be triggered, but other ones may. And then we have this thing called market width. So what we do is you don't want to have exit alerts just sitting that will trigger, because often what will happen if stock moves quickly or just it's opening, the markets will widen out, and you don't want to get an alert when it's wide. You're not going to be able to trade out of it anyway. So we have this kind of handy tool that varies for each trade, and you could even override it set at the market width. So, for example, WES is not very liquid, and so that's a full percentage wide for that. So that's market width times the stock price is how wide, if you can imagine that. But then CRM is 10 times more narrow. So that's something that, because CRM is a lot more liquid. So those are good ways to filter out. You don't want false positives on this. So that's a neat thing that you could see the market width and what all your profits were, profit targets, and then you could see your notes. So on the mouse over, you could also, if you wanted to delete a few of these, you could delete them as well. Mm-hmm. So that is a nice aspect. Our exit alerts, and again, alerts can be also a prelude to auto trading. So if you're setting up we'll have auto trading eventually, be down the road a bit, but what you want to do is be able to test out the alerts, make sure you're not getting any false positives or false negatives for that matter. You're not missing any, and check out the alerts, and I almost treat these as a trade that would have happened had we been automated. So you really need to pay attention to these and set them where you want to trade.
Right. Yeah. We're very big on, systematic trading here, right? Now that's why we do the back testing, and we really try to be disciplined, and exit alerts really help with that approach.
Right. So that brings up a good point. So let's go over to, maybe a trade that we'll do today from the trade ideas that has exit alerts. So, I'll have them on this time. So these are all the trade ideas. These are the best trades from, what do we have? 181 million pre-run trades out there. And these are the ones that match the current environment. So whether it be VIX, the moving average, RSI, implied volatility percentile, or slope percentile, it matches at least one or two of these of the current market. So right now we're overbought and the slope is low in this particular symbol SPY. So then what happens is you get this particular trading strategy is back tested, and it only gets in when the criteria are met. Those criteria, slope and it's overbought. And they want you to get out on a 25% target. So this is interesting because it's a longer term trade, and these are the low stress types of strategies that I like. It did somewhat poorly here when the market was down, but other than that, it's had a pretty good run. So
yeah, you can see the max drawdown there is pretty low.
yeah,
Sometimes what I like to do, Matt, is on the graph, just to get a little bit more of a visual comparison to the stock return, is set that drop down that where it says 20% to like 50 or 75, and then you can even keep increasing it sort of till it matches that stock return, and then you can sort of see that drawdown more compared to it.
Right. So so this looks like a decent one. So let's take a look at this. A good scan for options. So it automatically sets up, and then we know it's a 25%, so we'll set that up as well. So so let's pull up this order. We'll get a fill about here. Let's go for the whole enchilada here. Review order, and we could put it in here as well. So that's 25%. So 2.5, 18 cents wide. That should be fine. And so that should go in, and that'll be our trade for the week, Tyler.
All right.
Or if we do one more. So again, I was sorting on Sharpe ratio. You could sort on many other, many different things. Sometimes the forecast, is there a lot of edge in it right now? And like you said, we liked that because it wasn't much drawdown in that particular one. Here's one with a small amount of drawdown, but there's not much return in there. Here's a long put calendar with pretty good margin return and low drawdown. So let's check that one out. So this one kind of looks good too. And now, unfortunately, this is one that there is no X alert, but we still like it. So why don't we do this one too, Tyler?
Yeah, sounds good.
Okay. And like I said, let's pay the offer. So no alerts on this one. All right. So as you said, these are using the title of the show today is using X alerts for risk management. And also just to be more disciplined in your trading. So also a good way to be disciplined in your trading is to use back tests, so you could see how it behaved under certain market conditions, and what you can expect from a profit and loss standpoint. But you have to follow the exit that you test. So we test when we have those X alerts. We test getting out at those spots. So the X alerts will send you a text, email, or a Slack channel of the alerts that we're getting. So that's it's a very convenient way to jog your memory. And if you put enough information in that alert, it's quite effective for helping us manage these things, Tyler.
Yeah, that's an interesting point. If you go to the backtest finder, you can see how we do this in more detail. So we have the featured backtests up there, but that all backtest page is where you can filter by those exit alerts, and you can really see if you take everything else out of the equation and just look at how we change the exit alerts on each backtest. You can see the very big difference in the returns and the drawdowns and everything like that by just changing the exit trigger, which is really interesting.
So I could go find similar backtests, and we'll uncheck the exit triggers and see, what to your point, how different. So this is the best resulting one is just 75% only. So you only get out if you lose 75%. But if we, instead of ascending, we send this descending. So it's still the same setup. It's a 30-day buying the 10, selling the 30 delta. The spread to stock, we could talk about that later. It's various exit triggers, but this is a case when you're actually losing money on this particular strategy that was a winner before, but now you're getting in and out too quickly. So that's the problem there. You're not getting enough profit. So it looks like it just looks like you're taking profits too quickly, and also you have a stop loss. Again, sorting it ascendingly, in this case you only want to do it. If there's very little chance that you're going to make money in this, you just get out. And then here's the second place one. Isn't too far behind, taking profits at 75%. So this is a defined target that you could get. You can only get what your credit is. Stop loss at 50 is almost like 75. So you're starting to see a lot of similar results here in a similar kind of trading pattern. And then it'll start to fall off later on as you start to change more of your trading patterns as far as exit alerts. So I think that's a really neat thing to be able to do. It's a good point that you brought up, Tyler, is to go in, look at a strategy that you might be considering, seeing all the different ways that we've tested them, as opposed to exit on the stop loss, exit on the profit as well. So you could see all those and see which ones really work well and when they start to fall off in performance. Obviously, these stop losses are a little bit tight, and the performance is falling off too.
Yeah, very, very good tool, and very good for this specific purpose of finding which exit triggers are more effective than others.
Right, and again, what we did is so let's clear all these filters. So again, what we did is we went into a certain strategy, and then we found a strategy that we liked. And when we clicked the strategy, we went to looking for all similar strategies, and except for the strategies that we're isolating. So you find a strategy that you like, preferably with an exit strategy here, and then you go and say, okay, well, let's look at similar backtests, but let's unclick the exit and entry triggers. So now it's going to go, it sets all these filters. By the way, you could go in manually and do all these, but it keeps all these, everything fixed except for, so it's only doing, the triggers and spread percentage that you have, and it's showing you the best one that you had, and then it's showing again how the other ones performed. And then, again, if there are a lot of them like there are here, I'll sort it descendingly. And then you could see that there are a few losers in this particular strategy. And that's general. It looks like it's taking profit pretty quickly. So, you can kind of get a feeling for what's working and what's not working here. So here, the best ones are stop losses. The worst ones are taking profit too quickly. So what this tells me is at this particular day's expiration in deltas, you want to have a stop loss, but not a profit loss, for lack of a better term.
Yeah, that totally makes sense. One other thing, if we're done talking about the back testing and exit alerts, the community has been a very cool feature we added recently. And Matt, you're posting in there quite a lot. Do you want to go over some of the more recent posts that you've made?
Absolutely. So here's the community, and this is nice because we're able to go through things that we're noticing in the market that you might not notice on your own. So I was talking about the SPX contango. The fear has gone 3 days ago, and the market's gone basically straight up. Adobe had huge earnings. We had 2 trades. One was closer to the money. The other was out of the money. And then we shared some actual, the data and we had two trades profitable net, but one was a loss and one was a big profit. So we showed how those look. And then just this morning, that the semiconductors were rallying, and so we just kind of say why these are rallying. So it's a nice place to share ideas. We just started, so there's not a whole lot going on yet, but we're putting it's fun to be able to put comments, things that we're seeing, and then get feedback, and it's just good to be able to talk about certain trades or talk about certain things that are happening in the market, and get feedback from people in the community.
Yeah, it's really neat. All right. Is there anything else you wanted to talk about today, Matt, with the trade journal, maybe?
No, I think we're good. I mean, the trade journal is upcoming. We are actively working on that. We talk about exit alerts and risk, but all part of the pillars. Again, if you go to the ORATS website and you go to university, our pillars are researching, which is back testing, implementation, which is scanning and other things, risk management. That has a lot to do with the exit alerts, and then review is the journal. So that's kind of our next big step that we'll be spending some more time on how to not only back test, but then go and make sure the back test is still working, that you weren't forward looking, and you did your homework. As we showed earlier, we compared the performance of the back test to other similar back tests. You could even do that to other similar symbols just to make sure it's a robust strategy that you're testing. So that all falls into the pillars. And then, as you say, journaling will fit into the review.
All right. It looks like we got a comment, Matt. First one on the live show so far. George asked us if we can talk more about the spread over stock percent in the backtest finder.
Right. Good question. So the spread over stock. So basically, you could think about that as the price that we're getting divided by the stock price. So in this particular option or strategy, it's very high. 3% is very high. It says low, but it's low negative. So that's a high amount of money to get if you think about it that way. And so we have low, moderate, and high, where we will look at a particular strategy, group how many trades are falling into each kind of tricile we break it into 3 different groups, and then we say low, medium, or high. What's the best way to trade this? So, so for example, if you were to trade moderate or high, I don't think the results would be that good. So when you're doing this particular put spread, you want at least 3% on the trade that you're getting. So hopefully that answers George's question.
Yeah, if you go to the custom backtester, you can also input this yourself, and there's an explanation on there, and maybe we can look at that and see if that makes sense. It allows you to filter based on the options trade price relative to the stock price. So this is sort of, you're setting a target and a min and a max
Right.
of that indicator.
And if we're going back to 2007, Apple was much lower, so it's you want to have a relative price, so that allows you to look at that price. What are you getting in percentage terms to the stock price, which is nice.
Is there a general rule of thumb, Matt, just to sort of wrap my head around it? Like, if we're thinking of just like a long call, very basic strategy, is it better to have a higher spread over stock price or a lower one?
Well, usually lower. I mean, that, you don't want to pay too much. And so what you'll see in the long calls is you'll see that the percentage, that you're paying is you're going to be paying a smaller price. And those are usually the times that you want to be trading particular. That's just a generality, but, especially what I've noticed in the back test are you want to be in the best one for you. So this is the most favorable, even though it says low, that's a low negative. So you want to get as much as you can from the trade, or don't trade it.
Are there strategies where this filter matters more than others, like maybe in calendars or in vertical spreads?
Yeah, I mean, and again, it's a matter of going through it, because what you'll see is you'll either see readings in here in the best ones, or you won't. So that's the best way to kind of look at that. I think my filters are too tight right now. So yeah, so these are low as well. So right now, like, to answer your question, so this one is all the best ones are low. And, if you were to only look at high, then what you'll see, it'll take a second to go get these, but these returns aren't nearly as good.
Interesting.
Yeah. So good question by George.
All right. I think that covers it for today's show. Thanks, Matt, for talking about exit alerts, discipline trading. I think it's very important to keep disciplined, and using the tools like the backtest finder and the exit alerts tab to manage your positions and exit alerts. We'll be back next week with another show. If you guys have any questions, please use the community tab to reach out, or you can contact us at support@orats.com. Thanks, Matt, and thanks, Tradier, for hosting us, and we'll see you guys again next week.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and/or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and/or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.